Joining us from San Francisco, we have George Feiger, President and CEO of Contango Capital Advisors, which has about $4 billion in assets. George, good to have you with us. Some interesting times on the markets. You have heavy losses really across the board. What are you doing right now?
We are expecting this kind of losing period to continue for some time. We've pulled back a lot of our international exposure. We're in U.S. blue chips, short duration bonds. We expect the dollar that will rise over the next few months. And at that point, we're going to look at diversifying more out of the U.S.
Okay, what makes you think that we're going to see this selling and these losses to continue for some time? And what do you mean by some time?
Well, the structural situation that's been present for several years hasn't changed, which is the massive overhang of debt in the United States and some other places, and the inability of the very low rate of economic growth in the U.S. to solve this problem. The other side of this coin is the very rapid economic growth in places like China and Brazil associated with a lot of inflation. So the instability created by the original credit collapse continues. And this oscillation means that periodically things are overvalued and then undervalued. And underneath it all is all this debt that just can't be repaid. And in the case of the U.S. government, continues to accumulate. And that leaves underneath it this further threat of how do you get out of this mountain of debt which keeps growing. And so we don't see any answer to this coming from the political process. And we're therefore very cautious and in the end rather negative about certainly the bond markets in the United States, though not in the very near term.
Well, but George, give me a timeline. How long do you think you'll be negative for?
How long we'll be negative for? Well, the dollar was substantially oversold. We expect it to continue to recover. The real problem in the U.S. is that the political process is completely stalemated. An election is coming up. Nobody wants to get up and say, hey, we've got to change things. You've had the President's Deficit Commission, which had a perfectly reasonable plan. The Republicans' Ryan proposal wasn't that different. A couple of issues on revenue. But both of these plans have been disavowed by their authors. The President doesn't stand behind the Deficit Commission. The Republican Party doesn't stand behind Ryan. And while they're playing their games, the deficit mountain rises all the time. And if that continues at some point, the bond markets are going to react. We'll have a jump in interest rates. The jump in interest rates causes the government to have to pay out much more in debt service. The economy slows down, and we can start another period of crisis. So,
well, George, if you're so negative on the U.S., why in these volatile times are you running to the safety of U.S. blue chips?
Because the long-run trend is one thing and valuation is another. At the moment, much of America has been oversold. The story I'm telling you isn't a new story. Many people have said negative things about the deficit. Everyone's bullish on China, bullish on Brazil, bullish on India. Things get overbought and oversold. Part of this business is deciding what's fair value, what's cheap, and what's reasonable. So we're biding our time. At the moment, things are oversold in America, and it's likely that things will be better here for a while, certainly in the stock market, than they will in some other places.
Okay, George, that's interesting. Thank you for sharing your views today. That's George Feiger, President and CEO of Contango Capital Advisors, joining us from our San Francisco bureau.